Are you looking for a simple, reliable way to grow your wealth? Well, you're in luck because today we'll be talking about one of the most popular ETFs on the market, the Vanguard S&P 500 ETF, better known as VOO. But before we get to that, if you're new here and you never see my channel, my name's Elliot and I upload videos about investing, the stock market, and I do updates on my own portfolio, which is on the Robinhood app. So if that's something you enjoy, please consider subscribing. I upload videos just like this every 2 weeks. Let's start things off with the basics. What exactly is VOO? VOO is an exchange-traded fund, or ETF, that tracks the performance of the S&P 500 index. Now, what's the S&P 500? The S&P 500 is an index made up of the 500 largest publicly traded companies in the U.S., including household names like Apple, Microsoft, Amazon, and Coca-Cola. These companies represent a wide variety of industries: technology, healthcare, finance, consumer goods, you name it. By investing in VOO, you're essentially buying a piece of all 500 of these companies at once. It's like having a front row seat to the overall U.S. economy. Instead of betting on individual winners and losers, you're betting on the collective success of America's top companies. Now, let's talk about how VOO works. Think of it as a basket that holds shares of all 500 companies in the S&P 500. When you buy a share of VOO, you're buying a tiny fraction of all of those companies. Unlike mutual funds, which might only trade once a day, ETFs like VOO trade on the stock market, just like individual stocks. That means you can buy or sell shares of VOO whenever the market is open, making it a flexible and convenient way to invest. VOO also pays out dividends. These are payments from the companies in the S&P 500 that get passed along to you as the investor. You can either take out those dividends as cash or reinvest them to buy more shares of VOO. Reinvested dividends can really supercharge your returns over the long term, thanks to the magic of compounding. So why do so many people swear by VOO? Let me give you the top 3 reasons. 1. Diversification. With VOO, you're not putting all your eggs in one basket. Instead, you're spreading your risk across 500 different companies from various sectors. If one company or sector underperforms, others may pick up the slack. It's a built-in safety net. 2. Low cost. Here's where Vanguard shines. VOO has one of the lowest expense ratios out there, just 0.03%. That means for every $10,000 you invest, you're only paying $3 per year in fees. Compare that to the fees on actively managed funds, which can be 10 times higher, and you'll see why low costs are a huge deal. 3. Strong performance. Historically, the S&P 500 has delivered an average annual return of about 10%. Now, this doesn't mean you'll see 10% every year. Markets go up and down. But over the long term, the S&P 500 has been a solid performer, and VOO lets you ride that wave of growth. Now, you might be wondering, is VOO the only ETF that tracks the S&P 500? And the answer is no. There are other ETFs out there like SPY and IVV, which are also popular choices. So what makes VOO stand out? It really comes down to Vanguard's reputation for low cost and excellent customer service. While all 3 ETFs are similar in performance, VOO's slightly lower expense ratio gives you a slight edge over the long run. Every little bit counts when you're building wealth. Of course, no investment is without risk, and VOO is no exception. While the S&P 500 has historically trended upward, it is not immune to market crashes or corrections. During periods of economic downturn like the 2008 financial crisis or the COVID-19 crash in 2020, the S&P 500 took significant hits. That's why it's so important to think long-term when investing in VOO. If you're the type of investor who gets nervous during market dips, this might not be the best fit for you. However, if you stay the course and avoid panic selling, history suggests you'll come out ahead in the long run. So who is VOO best suited for? 1. Beginners. If you're new to investing, VOO is an excellent starting point. It's easy to understand, and its diversification reduces risk compared to individual stocks. 2. Long-term investors. If you're saving for retirement or a major goal years down the road, VOO can be a great way to grow your wealth steadily over time. 3. Busy professionals. If you don't have the time or interest to research individual stocks, VOO lets you invest passively and still benefit from the growth of the market. Getting started with VOO is easier than you might think. All you need is a brokerage account. Popular platforms like Vanguard and Robinhood all allow you to buy and sell VOO with just a few clicks. You can start small. Even a single share of VOO gives you exposure to over 500 companies. And if fractional shares are available through your broker, you can invest with as little as $1. VOO is one of the simplest and most effective ways to invest in the U.S. economy. With its low cost, diversification, and strong performance over time, it's no wonder millions of investors rely on it to build their financial futures. So if you enjoyed this video, please take the time to give it a like, subscribe to the channel, and let me know in the comments below what's your thoughts on this ETF. And we'll see you next time.